Welcome back. I'm glad you're still with us here on Morning at NTV. Time now for a business update, and we'll be looking at developments in the banking sector. And if you have been following very closely, in the last 3 weeks or so, a major announcement was made by one of the leading banks in the country that it was exiting the wealth and retail banking prong. That alone, to the uninitiated, caused a little bit of goosebumps, but the bank says this is a great move and one that is in line with its core objectives and goals. With me in the studio is Charles Katongole, the Executive Director and Head of Corporate Affairs at Stanchart. I'm also joined by Paul Sefa-Badu, the Head of Wealth and Retail Banking at Standard Chartered Bank. Gentlemen, welcome to the program.
Thank you. Good morning.
Interesting developments in the banking sector, and the news that Stanchart will be exiting and paying a little bit more attention to some other segment was unsettling to some individuals, especially those that might be affected. We shall be looking at exactly how this is going to roll out. But if you don't mind, let me begin with Mr. Charles Katongole to bring us up to speed with this particular development.
Yeah, thanks, Chris. Morning, everyone. I think you're right. It's unsettling. Stanchart is an old institution in Uganda, 112 years.
Yeah.
We've been here at some point. We served as a central bank. We've really played in this market for quite a while. But looking at the wider context, Stanchart Uganda is part of a wider group, Stanchart Group. And within that group, we serve two key segments, the corporate and investment banking segment, but we also serve our wealth and retail banking clients, and we connect them to a unique network covering Africa, Asia, and the Middle East. And within this, we help them achieve sustainable growth. As part of that wider group, like any business, there will be reviews of strategy periodically. I think that happens in any corporate institution to continue deriving value and serving its clients best. And as a result of that recent review, Stanchart Group has reviewed the operation model in a number of markets, Uganda inclusive, and within those markets, it's exploring the sale of its wealth and retail banking business. Why? Because we're doubling down on two key things: our cross-border business within the corporate and investment space, but also on the affluent across the globe. The markets that have been impacted are Uganda, Zambia, and Botswana. And this is within those markets with the renewed focus and strategic direction. We feel there's not enough scale at the moment to deploy resources. So those resources will be put elsewhere. Again, as I said, it's just a strategic business decision. It has nothing to do with a lot of misinformation that you've had. It's just basic business call. As we're divesting in some markets, we're actually investing in others. We've just entered Saudi, we've entered Egypt, looking to go into more markets in North Africa. But all this is just tweaking and changing business decisions.
Okay.
It's not an immediate call, but I'll let Paul highlight what this means for our clients.
Okay, no doubt about that. I love when you say you're doubling down and then you introduce words like scale. Maybe context should matter here, given the fact that there's been a lot of information that has been thrown out there. First and foremost, before we understand exactly why you are going on to this next strategy move, what is wealth and retail banking? I have an idea about retail banking, but wealth, maybe, is it because I'm not wealthy?
Thank you, Chris, and good morning to your viewers. Yes, so like Charles said, the whole business of Standard Chartered is divided into two. So we have the corporate and institutional banking, and then we have what we call the wealth and retail. So when we talk about wealth and retail, we are talking about all the individual accounts. So whether somebody has current account, savings account, digital life account, and the product that we offer, is centered around, if you take Shillingi, for instance, we take offshore mutual funds, we're talking about bonds, we're talking about people who are taking personal loans, fixed deposit. So that plus what we call small and medium enterprises. So the individual plus small and medium enterprises, these are what form what we call the wealth and retail. So because there's a lot of focus on wealth creation and helping our customers to be able to exploit the different solutions that we bring on board because of our network. So basically we have a lot of wealth solutions. So we talk about like shillings, people want to invest. We're talking about bonds, people are investing in US Treasury, or people are investing in government Uganda bonds on mutual funds. So everything put together, but mainly is about the individual clients and then the small enterprises. Anything outside corporate will fall under what we call wealth and retail.
All right. Now, in Uganda, there is what appears to be a push, especially led by government, on private sector-led growth. And when a development like this one that affects individual account holders, these are the people who are running small businesses, so to speak, and maybe they are seeking more credit to be able to fund businesses. When news like this comes through, it is no doubt going to unsettle, like I said before. I do not know what plans are in place to ensure that this particular segment is either onboarded onto another player, so to speak. I don't know how it does operate in the banking sector. I think you can take that one.
Sure. So, and it's critical. The medium-sized enterprise is key to the growth of any nation, and especially a young nation like ours. So as we divest out of this segment, we said we're going to double down within our corporate and investment banking space. So whereas we may not directly bank these SMEs, we're going to work through partnerships. I think we're in that space where it's about collaboration. What value does Stanchart bring to the table? One, as I said, we're a global business.
That's right.
We help clients both internationally and locally access international markets. So within that space, speaking specifically to your question around how we'll support SMEs, one, we'll continue supporting the sovereign. Within the sovereign, say you have UDB. So UDB is one of our critical clients, and we want to support them. UDB is reaching those SMEs. We'll continue working with other banks. While for you may probably see us as competitors, we see ourselves as collaborators. So there will be various banks that will go that extra leg to touch the clients that we are pulling out of in that segment. But that means that we can actually work with them to approach that particular segment. And I've also said we'll continue channeling resources from international markets into the government funding program. We'll continue channeling those through even the other multinationals that we deal with that then offer product or even buy product of these SMEs. So it may not have a direct impact, but will contribute through supporting the network that then also supports the SMEs.
That must be a very huge network indeed that involves buyers that are willing to take this on. If you don't mind, Mr. Sefa-Badu, what is the transition time frame we're talking about?
Okay, Chris. So the whole process is going to take between 18 to 24 months because we need to work with our key regulators, stakeholders. So the bank is not in a hurry. We are not living overnight. And the comfort we want to give to our customers is that for this throughout the transition, their banking operations remain same. Nothing is changing. So people can continue to invest. People can continue to open accounts. People who have loans are supposed to service their loans, and they can take additional loans. So everything is BAU, you know. And the commitment that we have given to our customers that throughout this whole transition, we work closely with them, you know, because we believe that as a bank we have duty of care, you know, for our customers. So even finally when who the buyer is announced, we will have to make our customers aware that finally the bank has selected Bank A or Bank B. That should give our customers the option to make informed decision
That's
whether really they want to go with a bank
yeah.
that the Standard Chartered has selected, or possibly they want to look for another bank. But what we are telling our clients is that we will take them through this transition. And the good thing is this, like Charles mentioned, this is not the first country we are doing this.
That's right.
We've done this in a couple of countries. We've done it in Philippines, Thailand, and the African continent. We've done that in Tanzania. We've done that in Cote d'Ivoire. In all this, as a bank, we have been very transparent. You know, letting our customers understand the decision that we've taken. You know, and the further, when it comes to the operation of the account, throughout this whole transition, nothing is going to change. Their relationship managers are available. The bank is available. So that is the comfort we are giving to our customers, that there's no need panicking. We are here for the next 18 to 24 months. And the bank's commitment is that we will look for a buyer that should be able to serve our customers the way Standard Chartered has been doing, and also being able to take our staff. So that is the key consideration, even who the buyer is going to be. You know, so we are not just selecting the buyer. These are the two considerations. First, our client, to ensure that whoever is taking over should be able to serve our customers the way Stanchart has been serving. And also the product and the service we are offering, they should be able to take that same products and then offer to our customers. And then our employees, quite critical for us. We want to believe.
Yeah, I was just going to ask if it is really something that could unsettle the customers, then the staff, because this is a major decision that is being undertaken, and it affects so many people. Many of them might not take it as smoothly as they were expected to, and I think there are modalities that will be rolled out to help them. Just take us through that.
Yeah. Okay. So it's an impulse document.
So So like I said, the two key considerations for this whole transition and who the buyer is going to be is our client and our staff. So as much as possible, we are looking for a buyer that should be able to take our staff.
Okay.
So that message has gone to our staff, you know, for our staff to be rest assured that in all the countries that this has taken place, our staff welfare has been taken into consideration. So whoever the buyer is should be able to commit that you are taking our staff. That is one. And the other bit, which very critical to us also, is our client. We believe that, like Charles said, we are selling part of the business. Standard Chartered Bank will still remain in Uganda,
no doubt.
You know, through the corporate and institutional banking. So we are not going anywhere. Okay. You know, it's just that part of the business is being offloaded to a buyer. And therefore, our clients, how we treat our clients in this whole exercise is quite critical to us, because we are not going anywhere. We are still here. So our clients continue to be critical, but most importantly, our staff. And the commitment is that whoever the buyer is should take care of our staff. So for now, for the next 18 to 24 months, our staff available, remain. Everything that is due our staff continue to enjoy it. Clients to be rest assured, their relationship managers are available. They can call them. All that we've been offering them for these 112 years, nothing is changing for the next 18 to 24 months. So that comfort we want to give to our client.
All right. Allow me delve into the general picture that is the banking industry in line of this development. When you say you are looking for a buyer, or you hope to offload your customers and your staff to somebody who will do exactly what Standard Chartered has been doing in terms of product portfolio and even the human resource capabilities that you've been offering the members of staff. Banks are grappling with issues or headwinds that are occasioned upon the industry by so many factors. In identifying a buyer, there was a recent development that required all banks to capitalize to a certain level, and we noticed that some could be struggling. When you look at the array of possible buyers, what confidence do you have that these buyers have the capacity to do what Standard Chartered Bank does?
Well, thanks, Chris. Just to explain the process, and so that our viewers understand the timescale and also what's coming. So the first bit was the group board, which is a Stanchart group board making the call that I think we need to divest out of these businesses and invest in others. That's been made. That decision's been made. It's been announced by the end of, I think, October. End of November, our local CEO, Sanjay Rugani, also did come out and announce that Uganda is one of the impacted markets. Post that announcement, we do engage our regulators as well. We're a regulated entity by the central bank and various other regulators in Uganda. So we did engage our regulators. We then came out, announced to both staff and our clients what this means. Now we're in that process of engaging everyone, really making sure that people understand what this means, as Paul has highlighted. It's not an exit, it's a sale, and there's a portion of the business that still stays, remains here and will continue contributing to growth. Post that, there will be interest that will be collected from interested buyers. It's a very good retail business. It's a solid business, good product, good service, good clientele. I think we can safely say that we have potentially some of the best clients within this market. But as I said, it's a strategic call in terms of our ability to scale, given where the direction the group is going. For now, it isn't there, which is why the call was made. So post that, the interest, there will be appraised. Paul, I think, highlighted two critical areas, what the prospective buyer will do for our staff, and also service and product to our client. If those are met, there'll definitely be due diligence done. Is this the right person for us? Then we'll engage the regulators. And among the things the regulators, even ourselves, look at is the capitalization. Because for you to have a banking license, you need to meet some criteria. That's right. Yeah, and all this takes time, which is why we're saying there's no need to panic. We will walk with you along this journey. We'll be back here to explain the stages we are at, just so that everyone's quite clear. At the end of the process, our clients will be given an opportunity if they want to continue with a new buyer or move on to other providers in the market. Okay, earlier on you spoke about collaboration and not competition. Stanchart, for the time that it has been here in the market, has players that you have collaborated with very closely. I don't know whether those ones get the right of first refusal on buying, or it will be an open bidding process. It's I don't know if it's not restricted to anyone. I think, as I said, they'll listen to all interested parties, and once the two key criteria met and other considerations, the regulator has to have their word in there as well. We'll make sure that we pick the best possible solution for this market. Remember, we are still in this market. That is right. We're not exiting. So the decisions we make also have a flow-on impact in terms of what's left in Uganda for us. Okay, so let's focus as we enter the final bend of the discussion on the business that stays, and maybe that will offer a little bit more confidence and understanding on the part of those who might not be confident enough on what is happening. So the business that is staying, you'll be attending to institutional clients. Yes. So who are those? Yeah, and I'll get there quickly. First, and I'll let Paul have the final word on even the next 18 months, 24 months, there's a lot that you can still get out of our wealth and retail business. But to your question of the business that stays, so what will remain will be our corporate and investment banking business. In layman terms, this is usually the corporate segment. This serves two key segments. We have the corporate segment and the financial institutions segment. Within the corporate segment, we have multinationals. So these are your large global businesses or global subsidiaries, your likes of Cork, MTN, those. And then you also have the large local corporates. These are your large manufacturers within the market. So those are within the corporate segment. Then we also have the financial institution segment. We have banks, as I told you. That's right. We consider them as our clients and we help them. Investors, your pension funds. You also have DOs, development organizations within that. And you also have the government, because it's one of our key clients as well. And so within that segment, we'll continue to offer what Stanchart has and is very good at, which is connecting us to the rest of Africa, connecting Ugandan markets to the rest of Africa, connecting it to the rest of Africa, Asia and Middle East. We'll continue bringing the best products. We have, I keep saying, one of the best cash management solutions for people within the corporate world. They understand just how difficult it is to manage your cash and liquidity. But we have one of the best solutions. We'll continue providing funding, risk mitigation, advisory services, and as I said, bringing the best that a global business, huge skill, but also depth. And finally, we still remain connected within this market. So our clients can leverage those connections as well as they look to grow.
Mr. Badu?
Yeah.
I know you're going to be having the last word on this, but what I do gather here is that the board, either in the headquarters, UK, has decisions that it makes, and Uganda and Tanzania, you said, which other countries affected?
Uganda, Botswana, and Zambia.
And Zambia, rather. The decisions have to be made, and there's realignment that must be undertaken. At the end of it all, the economy is going to feel the pinch. Account holders are in vast numbers. Have you done projections and, for example, if there is any glitch, so to speak, how recovery can be undertaken on the part of the economy? Standard Chartered is a big bank. It has very many account holders, those individual guys, and the effect is going to be felt, no doubt. What are your projections on how best the shocks can be taken?
Yeah, Chris, that's a very good question. I think the comfort that we have given to our client and we continue to do is that this whole process, this whole transition will be as seamless as possible.
Okay.
First and foremost, like we said, we want to bring in a buyer that even if not at the level of Standard Chartered Bank, is close to the level of Standard Chartered Bank because of our customers and because of the products and services that our customers have come to know. So this whole process will ensure that it goes through successfully and minimize any impact or disruption for our customers. And that is the commitment that we have made. So right from the announcement, we have been deliberate in engaging all our clients for them to appreciate and understand the decision that has been taken, the whole transition, the process that is going to be involved, and how the bank is going to be as transparent as possible with our customers. And there is no information that we are going to hide from our customers. We're going to make sure that every information that our customers will need to make informed decision that is given to them. The commitment, once again, we're giving to them is that look, for this 18 to 24 months, nothing is changing. Every product, services that you know from Stanchart, we will continue to offer them. Our RMs, our senior managers, everyone is available to serve our customers. So that commitment we have given. And we've also said that we are not withdrawing any of our products from the market because of this announcement. All the products that we are offering, we will continue to offer them. I know the concern for most of our customers has been, we have some customers who have investment that are offshore. So they're asking, okay, so after the 24 months, what happens to our investment? If I have an investment, for instance, I don't think there's any bank in this country that connects Ugandans to the outside world like what Stanchart do. So we have customers who are able to invest in U.S. Treasury. We have got clients who are having offshore mutual funds. Now the question is, what is going to happen to our investment? What we have told our customers is that if you take any of our bonds, whether it's a local bond where government of Uganda bond or U.S. Treasury, the underlying terms and conditions remain same because actually it's the customer with the issuer. In this case, if it's local bond, is a government of Uganda. And Stanchart largely has been a distributor between our customer and the bond issuer. So even while Stanchart is even leaving the scene, you know, in terms of the retail, the underlying condition, terms and conditions remain same. We also have customers, for instance, who have local mutual funds, Shilingi. You know, a lot of our customers have Shilingi. Now they're asking what is going to happen. What we are telling them that the fund manager for our Shilingi product is Sanlam Investment East Africa.
Yeah.
Sanlam is not going anywhere. The terms and conditions remain. So we are giving that comfort to our customer that nothing is changing. They should be rest assured that this bank will do the right thing. We will be transparent with them. If you remember, in February, we launched what we call our international banking. Yeah. Our international banking largely connects Uganda to our 5 key hubs. So we have customers who are interested in investing in UAE, Jersey, Hong Kong, Singapore, India. That proposition still exists. So today, there are more customers who are even trying to buy into those investments. Where here, you are here, and yet you have an investment in UAE. And these things are not going to change. And we want to continue to assure our customers that the bank will continue to do the right thing. They can be rest assured that their funds and their investment are safe with a bank. Mr. Paul Sefa-Badu, Head of Wealth and Retail Banking at Stanchart, many thanks for that reassurance, and many thanks to you too. Charles Katongole, Executive Director and Head of Corporate Division at Stanchart, many thanks for making time. That will do it for our business update. We shall go for a break. When I return, we shall delve into matters that link government funding to the quality of services provided, especially in the education sector. Do stay with us. I'll be right back.